Hey everyone, welcome back. We're diving into something a lot of you have been asking about, UPL Limited's Q3 financials for fiscal year 2025. We've got all the goods, the earnings call transcripts, the press releases. And, UPL, they're a major force in sustainable agriculture. But what really jumped out at me were some seriously impressive numbers, like a 420% jump in EBITDA year over year, and their net debt way down. That's a real head turner.
Yeah, UPL definitely seems to have had a strong quarter. Management's calling it a bounce back, and looking at the numbers, they have reason to be optimistic. Revenue's up 10%, and their EBITDA margin, which gives us a sense of how much profit they're making on each dollar of sales, sits at a healthy 19.8%.
Okay, so 19.8% margin, that's impressive. But let's get back to that EBITDA for a second. 420%, I mean, is that even possible? What could have caused such a massive change?
That's a really good question, and it shows why it's important to look beyond just a single number. There's always more to the story. So one factor they mentioned was rebate normalization, which basically means they offered fewer discounts compared to the previous year. That alone can significantly impact profits. And on top of that, they've been working on improving their cost of goods sold. In other words, they're finding ways to produce and sell their products more efficiently. Lowering those costs directly contributes to a higher EBITDA.
Got it. So it's not just a random spike, there's an actual strategy at play here. But while they're celebrating these wins, they also mentioned some regional challenges, something about the rest of the world segment not performing as well.
Yeah, you're right. North America and Europe were the stars this quarter. Incredible growth, 59% and 28% respectively. But the rest of the world segment, which includes many emerging markets, actually saw a decline. And here's where things get interesting, because UPL reports its financials in Indian rupees. So when the dollar strengthens like it has been recently, their earnings in other currencies translate to fewer rupees. On paper, it looks like they earned less even if the underlying performance was solid.
Ah, so currency exchange rates are playing a role. Okay, that makes sense. But I also remember reading about challenges beyond just currency fluctuations. What else might have contributed to that dip in the rest of the world segment?
Yeah, you're sharp. You're absolutely right. Currency isn't the whole story. UPL pointed to a few specific issues in those markets. For instance, the Chinese market has been weaker than expected. That's something impacting a lot of global companies, not just UPL. They also talked about delays in government tender business in Africa, meaning some big contracts are taking longer to finalize. So it really is a mix of factors, both external and internal. Got it. So a bit of a mixed bag there. But let's switch gears to something I found really impressive, their progress on debt reduction. They made some serious headway this quarter. What was their secret weapon? Well, they used a clever financial tool called a rights issue. Imagine like this. They offered their existing shareholders the chance to buy more shares at a discounted price. This allowed them to raise a substantial amount of capital, about $400 million, which they're using to pay down their debt. And get this, the rights issue was oversubscribed. Investors were eager to get on board.
So they're using their strong shareholder support to improve their financial health. Pretty smart.
Exactly. And that's not their only strategy. UPL's aiming for a specific financial target, a net debt to EBITDA ratio of 2x. Now that might sound a bit technical, but it basically means they want their net debt to be no more than twice their EBITDA. It's generally considered a healthy level of debt for a company. To get there, they've got a three-pronged approach, using the proceeds from the rights issue cash flow from their operations, and something they called advanta monetization.
Hold on, Advana monetization. You've lost me there, and probably our listeners too.
Of course, happy to break that down. Advanta is UPL's seed business. And monetization in this case essentially means they strategically sold off part of their stake in Advanta to another company called AlphaWave Global. This brought in a cool $350 million.
Wow, so they're pulling resources from different areas to tackle that debt. That's some impressive financial maneuvering.
Exactly. And it gets even more interesting. Out of that $350 million, $250 million came from UPL selling some of its existing shares in Advanta. That went straight to paying down debt. The remaining $100 million wasn't a sale, though, but an investment by AlphaWays directly into Advanta itself, meaning Advanta gets a cash infusion to fuel its growth, which ultimately benefits UPL as well.
Okay, now that's a win-win.
All right.
They're not just cutting costs, but strategically using their assets to strengthen their overall financial position. But didn't they also mention some bonds coming due soon? Something about perpetual bonds. What's the story there?
Wow, you don't miss a beat. You're right, UPL does have perpetual bonds maturing soon. They're a bit unique because, unlike traditional bonds with a fixed maturity date, perpetual bonds can theoretically go on forever. However, companies often have the option to call them back after a certain period, meaning they can repay the bondholders before it reaches that theoretical forever point.
So what's UPL's plan? Will they be calling back these bonds, or are there other options on the table?
On the earnings call, management said they're considering both options, calling back the bonds or refinancing them. Refinancing could involve issuing new bonds or taking out term loans. They haven't made a final decision yet, and they'll likely wait to see how market conditions develop closer to the maturity date, which is sometime between February and May of this financial year.
Makes sense. No need to rush when they have some time. But speaking of the long term, let's shift gears a bit. What about the bigger picture for UPL? How are they planning to grow in such a competitive industry? What's their game plan?
Well, a big part of it is their focus on volume growth. And this ties in nicely with their emphasis on what they call sustainable and differentiated products. Things like biostimulants and biocontrol agents, basically more environmentally friendly solutions for crop protection and boosting yields. It's not just a feel-good initiative, though it's a smart business move that aligns with the direction the entire agriculture industry seems to be heading.
Okay, so they're not just hopping on the sustainability train, they're trying to be the conductor. But what exactly makes these products differentiated? I mean, other companies are offering similar things, right?
That's a great point.
Uh-huh.
It's not enough to just be green. You have to offer something unique and valuable. UPL has been talking a lot about a product called Naxase, a three-way fungicide. Now, fungicides themselves are nothing new, but what sets Naxase apart is its effectiveness and the fact that it combines three modes of action, which gives it broader protection against different fungal diseases. It's already a big hit in Brazil, and they recently got approval to start selling it in the U.S., which is a huge market.
Got it. So they're innovating and expanding their reach with these targeted products. But even with the best product in the world, you need to get it into the hands of farmers. How are they tackling that distribution challenge?
That's where their investment in the sales team comes in. They're providing extensive training programs and equipping their salespeople with the tools to effectively communicate the value of these sustainable products, not just to farmers, but to distributors as well. It's not about pushing a product. It's about educating and building relationships.
Right, like that saying, sell the benefit, not the feature. They're not just saying, hey, buy our eco-friendly product. They're explaining how it can actually solve problems and boost a farmer's profits.
Exactly. And that leads us to another interesting aspect of their strategy, their private label business. With all the uncertainty around tariffs and trade with China, UPL is in a good position to offer a solid alternative. For those looking for high-quality products, they're focusing on a mix of branded and private label sales, especially in North America, as a way to drive growth.
So they're hedging their bets, diversifying their offerings, and making sure they have options for different market conditions. But we've talked a lot about what UPL is doing well. Are there any potential challenges or roadblocks they might face moving forward?
That's an important question to ask. Even with a strong quarter, UPL isn't immune to the realities of the global agriculture market. Things like commodity prices, weather patterns, even geopolitical events can throw a wrench in their plans. In fact, they mentioned facing some pricing pressure in certain markets, especially for their older products, the ones that are no longer protected by patents.
Makes sense. Once a patent expires, other companies can jump in and start producing generic versions, which usually drives prices down. It's a common challenge in a lot of industries. So how is UPL dealing with this pressure?
Well, their focus on differentiated products is a key part of their strategy to counter that pricing pressure. By developing innovative solutions that offer unique benefits, they're less vulnerable to generic competition.
So they're betting on innovation to stay ahead of the game. But even with innovative products, they still need to get those products to the farmers. Which brings us back to distribution. I think they mentioned some potential issues on that front as well, right?
They did?
Yeah.
They talked about the consolidation happening in the agricultural distribution network, especially in North America. What this means is they're dealing with fewer but larger distributors, which can be a double-edged sword. On the one hand, it can streamline things, but on the other, it can make them more dependent on these key players.
It's like putting all your eggs in fewer baskets. So they need to make sure they have solid relationships with those distributors while also exploring other ways to reach farmers directly.
Exactly.
Wow.
It's a delicate balance. And then there's the regulatory landscape. Getting new products approved, especially bio-based ones, can be a long and complicated process. UPL needs to navigate these regulatory hurdles smoothly to get their innovations to market quickly.
Ah, yes, the regulatory maze. That can be a real headache for companies in this space.
Speaking of headaches, UPL mentioned a pretty big one on the earnings call. What was that about?
You're probably talking about the distributor bankruptcies in Brazil, which is a key market for them.
That's the one. It sounded like a real curveball. How did they handle that situation?
To their credit, they took a proactive approach. They set up what's called an ECL, an expected credit loss provision. It's basically a way to account for potential losses from those bankruptcies and minimize the financial impact. They also acknowledge that banks are being more careful about lending in the Brazilian agricultural market, which could have some ripple effects.
Like a domino effect, one event can trigger a chain reaction. But it sounds like UPL is trying to manage the risk responsibly. Anything else from the earnings call that stood out in terms of potential challenges?
Well, they did highlight the impact of China on their business. It's a bit of a complex relationship because China is both a major market for UPL and a source of competition. The China factor. Always a multifaceted issue. How are they approaching that particular challenge?
Their strategy involves diversification on multiple fronts. They're not overly reliant on the Chinese market for one, and they're also focusing on developing those unique products that can't be easily copied by Chinese generic manufacturers.
So spreading the risk and focusing on their strengths. But let's not end on a down note. What are some of the opportunities you see for UPL to really shine in the future?
Their commitment to sustainability is a huge asset. They're tapping into a growing consumer trend. People are more and more concerned about where their food comes from and how it's produced. UPL is well positioned to capitalize on this with their portfolio of bio-based products and their overall approach to sustainable agriculture.
It's like they're not just selling products, they're selling a story, a narrative that resonates with both consumers and investors. It's about responsible agriculture, environmental stewardship, creating a more sustainable food system.
It's a story that's gaining traction. Investors are paying attention. Companies with strong ESG credentials, environmental, social, and governance, are attracting more interest from those looking for companies that are not just profitable, but also ethical and sustainable.
So UPL is ticking a lot of boxes here. Financial strength, innovative products, sustainability focus. What else is on their agenda for future success?
Don't forget their ambitious debt reduction plans. By reducing their debt, they're making their balance sheet stronger, creating financial flexibility, and setting themselves up for long-term growth.
Right. It's like building a solid foundation for a house. A strong financial base lets them weather storms, seize opportunities, and invest in their future. But let's not forget the human element. We talked about their investments in training and empowering their employees. Do you think that will be enough to attract and retain top talent in a competitive market?
That's a really good point. It's no secret that the agriculture industry is facing a talent shortage, just like many other sectors. To stay ahead, UPL needs to create a workplace that's not just about competitive salaries and benefits, but also about purpose and meaning.
People, especially those entering the workforce now, are looking for more than just a paycheck. They want to feel like their work matters, that they're contributing to something bigger than themselves.
And I think UPL's focus on sustainability and their mission to make every single food product more sustainable can really resonate with those values.
It's a powerful message. But messages alone aren't enough. They need to back up those words with action, tangible progress, measurable results. What are your thoughts on that?
You're absolutely right. It's not just about talking the talk, but walking the walk. And I think they're taking steps in the right direction. They've published sustainability reports, set ambitious targets, and are engaging with stakeholders to show their commitment to responsible and ethical business practices.
It's an ongoing journey. There's always room to improve, but it's encouraging to see a company like UPL taking these issues seriously and making a genuine effort to be a force for good in the world.
Absolutely. So it seems UPL is doing a lot of things right.
Yeah.
They're financially savvy, innovative, and forward-thinking. But as with any company, their future success depends on how well they navigate a constantly changing landscape.
Absolutely. What are some of the key things you think they need to keep in mind moving forward?
Well, first and foremost, they need to maintain that agility we talked about, being able to adapt to changing market conditions, consumer preferences, technological advancements. That's going to be crucial.
Okay, we're back, ready to wrap up our deep dive into UPL Limited. We've covered a lot of ground, their financials, their sustainability efforts, those ambitious plans for the future. It's been quite a ride.
It really has. We've seen their strategic moves, their ability to adapt to a constantly changing market, and that commitment to creating a more sustainable and resilient agriculture system.
So for our listener tuning in today, what's the big takeaway from all this? What should they be thinking about as they go about their day after learning so much about UPL?
I think it comes back to that idea of not just surviving, but thriving. UPL isn't just trying to stay afloat in a tough market. They're actively shaping their future, embracing sustainability, investing in innovation, building a business model that can handle whatever comes their way.
They're playing the long game, thinking not just about next quarter, but the next decade and beyond.
Exactly. And they're doing it by considering all these different layers of complexity. They're not just focused on the bottom line. They're thinking about global trends, consumer preferences, those technological advancements, how it's all connected.
A holistic approach for sure. Recognizing that success in the 21st century takes more than just financial smarts. It means understanding the connections between business society, the environment.
And that leads to a big question for UPL and any company today, really. How do you balance profit with purpose?
The million-dollar question, right? Can a company truly do well by doing good? Can they create value for their shareholders while also making a positive impact on the world and the people around them?
Well, I think UPL is trying to answer that with a resounding yes. Their focus on sustainable agriculture, the investments in bio-based products, their commitment to responsible business practices, it all points in that direction.
But it's not just about good intentions. It's about actions and results. How do we know they're actually walking the walk?
That's where transparency and accountability become so important. UPL needs to keep measuring their impact, tracking their progress towards their sustainability goals, and be open about both the wins and the challenges.
Holding themselves to a higher standard, being willing to be judged not just on their financial performance, but on their social and environmental impact too.
Exactly. Which brings us to another important part of their journey, stakeholder engagement. UPL needs to keep listening to their customers, their employees, their investors, the communities they work in, to make sure their actions are in line with what people expect and need.
Building trust, fostering dialogue, recognizing that success isn't a solo act. It takes collaboration, partnership, a shared commitment to a better future.
Couldn't agree more. And that brings us to what I think is the most important takeaway from our deep dive into UPL. They're a company on a mission not just to grow and profit, but to make a real positive difference in the world. And while there will be challenges and uncertainties ahead, they seem to have the vision, the strategy, and the drive to thrive in a world that demands more from businesses than ever.
Well said. It's a story that's still unfolding, and we'll definitely be watching to see what happens next.
Absolutely. We encourage you, our listener, to keep exploring UPL's story too. Their investor relations website is a great place to learn more about their financials, their sustainability efforts, and their plans.
And maybe this deep dive has sparked your own interest in sustainable agriculture or the bigger trends shaping the global food system. There's a whole world of knowledge out there waiting to be discovered.
So keep learning, keep asking questions, and keep an eye on UPL as they navigate this exciting and challenging journey.
Thanks for joining us on this deep dive. Until next time, keep exploring.